Welcome to the new season of the Digital Gold Podcast. This is season 2, and I'm sitting here today with Stefan Rust, the founder of Laguna Labs. Stefan, welcome to the show.
I'm super excited to be here.
I'm excited to launch it again, especially with you, man. It's a great story you have, and I'm excited to dive into it for everyone.
Yeah.
So tell me more about Laguna Labs. When did you have the idea that we needed the products that you guys set out to build?
So it was started off a while back, right? When COVID hit, government shut everything down. What are we going to do? How are we going to live with that? We'll print a lot of money, but it's not going to have any impact on anybody. No impact whatsoever. We can shut down the whole economy. It's not going to have any impact, and we'll just print money anyway. And I just felt something's got to give, right? And ultimately it was inflation, right? And so I was also intrigued by Terra, the stablecoin that they launched, and so how can we build an inflation-protected stablecoin and then ultimately provide more governance on-chain as it relates to quantitative easing, quantitative tightening, and that there's a transparent, not curated, but immutable, visible, participatory sort of way of supporting the economy and opportunities.
And so you mentioned a way that couldn't be obstructed or manipulated, so you had to build your own data source, right?
Yeah. So we looked at how the data source is being aggregated. We noticed that it was like more than 100 years old, right? So they built this back in 1920s.
Wow.
So it was like
on paper and pencil.
On paper and pencil.
Surveys,
And now they do the same surveys and they do it with iPads. That's the innovation. And so we just felt, let's take a developer mindset to do this. How do we aggregate some? I think we've sourced from 50 different sources,
Okay.
18 million items that we track on a daily basis.
18 million items that you guys track, all via programmatic.
All programmatic, all on-chain, visible for free to anybody that wants to go, look at a dashboard, and you can see across 12 indexes at the moment, but we'll have about 50 in about a week's time.
Wow, so these indexes, what are they? What, everyday household goods?
Household goods, rent, is it rent that you're paying? Is it a mortgage you're paying? The prices of housing? Is it food? Is it food that you eat at home and you cook, grocery store food? Or is it food you eat out at a restaurant? Your utility bills, the cost of electricity, because ultimately that's influencing the amount you transport, right? Your transportation costs.
The cost of everything.
The cost of everything, right? Electricity.
Gasoline. It's like we got these two building blocks of our lives and we don't realize how much the cost affects everyone.
And that's really we've just been focused on that and try to identify all new sources. So just before we started this podcast, I had a call with a entity out of Switzerland that are aggregating environmental data.
Okay.
And so they've hashed it all on the blockchain, and so we're working with them to put that and make that available to smart contract developers, so that smart contract developers then can build products, financial instruments that allow anybody to hedge themselves and protect their purchasing power.
So what type of environmental data are you talking about? Like, is this temperature, is this humidity, or is this...
So it's less climate data. So we have another partner that we're working with, and we'll be announcing that next week as well, where we're actually bringing to market climate data. So all temperature, hyperbaric pressure, we're bringing historical weather data, floods, warnings, etc.
So when you start bringing this data to the oracles, that means people can build markets on top of this data that then they can make synthetic purchases or decisions or bets effectively.
Exactly.
Okay.
Exactly. And so if you look at the derivatives market worldwide, it's a $quadrillion size industry. You look at the commodities industry, it's another couple of trillion dollars. I mean, we can't even fathom those numbers because there's just so many zeros. But I mean, I think, realistically, it's just, everybody's going to be building off the back of this, and we want to allow that creativity to flourish.
And I think that's one of the important things is you need to have the right data set to understand how you're being impacted by these decisions that are so far out, that are so abstract for most people. Like, what does a quarter basis point rate increase look like? What does a 1 basis point rate mean to you?
Yeah.
You have no way to correlate that to your day-to-day life, so you guys are helping bridge the gap.
Exactly. And we're not only doing that, so we're also we're building a personal calculator.
Okay.
So what is inflation to you? Because your spending might be different to my spending, might be different to anybody else's spending, right? Mel's spending or whatever, right? And so as a result, how do we deal with that, right? And how do we calculate inflation to me, because I'm driving a lot, car, oh man, I have a high cost of transportation, so the inflation to me is 12%, right? But somebody in the UK that's staying at home, working from home, has to use aircon during the day because it's so hot, heating in the winter at night, they're suffering 88% inflation on utility costs. So for them, inflation is going to be slightly higher. How do you aggregate that number? Do I put that into my own spreadsheet? I can upload a CSV file. Do I use Mint to be able to track all my expenditure and my budgets? I can import from Mint. Can I have it on MasterCard? I see all my MasterCard expenditure, and I import that, and it then calculates my personal inflation. And that's also going to be for free, so anybody can calculate.
That's an amazing tool. Because that's one of the things I think is hard with inflation is how does it affect me versus how does it affect you? As you mentioned, electricity in UK is going crazy. So that's such a cool tool. So what are the numbers you guys are seeing at Truflation versus the numbers that are being reported or the numbers that have been reported? Is it a small difference? Is it magnitudes of a difference? Or is it pretty similar?
No, I mean, we had a much bigger difference earlier on. And it seems to be plateauing at sort of a level of 8 to 9%.
Okay.
We're reporting 9% on Truflation for the US, and the government's reporting 8.2%. And so there is a bit of a discrepancy, about by 1%, but it was greater earlier on. We were in double digit. We had recorded double digit inflations at the peak.
Wow.
Up to 13%. We were just shy of 13% inflation.
And so when you're calculating the number, and also the government is like a 6 months of like lagging data, is there a string to it, or is it just today, the present moment? Like, how does that work?
Yeah, so we do it on a daily basis. We can't get it right now to have it real time. We want to get it to real time, but in order to do real time, we need to have more predictive capabilities in terms of taking into account future pricing of specific commodities, and that will then ultimately also then have an impact on today's prices that we experience. But we do it on a daily basis. In contrast, the government is about 30 days late. So we're 30 times faster than the existing reporting mechanism.
And do you guys only do in US dollar inflation denomination, or is there other currencies are denominating inflation?
Yeah, so people have asked us, so we listen to the community and what they ask us. So they asked us to then go to the UK, so we launched inflation calculator for the UK. And we leveraged the same architecture that we have, and so that was very easy. We're now getting asked to have it in different denominations. So we at the past, or so far to date still, only do US dollar denomination. And we're looking to sort of see what other, we've actually been asked, can you put it in BTC and ETH terms, right? So I can then see how it ranks against that. And so we want to then have a widget that we can then add, that you can have compare versus Bitcoin versus ETH, and then you can then actually US dollar and see what inflation looks like.
I think this idea that we changed the base denominator currency is completely new over the past 20 years. Like, okay, first you had the forex currencies, dollar, sterling, euro, but now it's like, oh wait, you can add any asset underneath there, really, or any type of currency, and Bitcoin, Ethereum. So that's huge for the future. Let's see. So you talked about personalizing inflation data. What type of actions can someone take when they have that personalized information? Let's hear about that.
Yeah, so how do I hedge myself, right? If I know I'm experiencing a 10% inflation, how do I hedge myself against that? What do I do? And those are questions that we're now trying to identify products associated with that. And that's what we do at Laguna Labs. We're building, and we specialize in tools and protocols that enable inflation protection, inflation-proof economic opportunities, right? And so what do they look like? Now that we know what inflation is, or truflation, then how do we now build these products? One of the products that we first launched is a flat coin. And a flat coin is a stable coin pegged to inflation. So it actually moves US dollar plus minus inflation, minus when we have deflation, plus when we have inflation. So it sways both ways, and it's just that it stays flat to a basket of items that you purchase on a regular basis.
So is it the dollar, is it a basket of items for the whole world or the whole US, or is it for the stable coin, I guess, or is it a basket of items per individual?
At the moment, it's a basket of items for the US.
For the US,
So
okay.
we've just got it for the US. We don't have it for individual yet, but what we're doing is, I mean, we've been on this journey. We've launched the product about maybe 5 months ago in the level of maturity. We had an MVP, which was people could play around with. We were getting market feedback and giving independent developers the ability to practice and tell us how to improve it so that they could get a bit of an advantage and build products ahead of others. We have 40 companies and developers building on top of the Truflation data today.
Are you able to talk further about what these companies are building on top of your platform? Any really cool use cases that you're like, holy crap?
Yeah, super cool use cases. I mean, you can always expect, right? So they're building prediction markets, right? So people can gamble on what the inflation is going to be.
So like you could gamble on what their coffee is going to cost in the future.
Yes, yes. So they've taken all this up. We don't have coffee right now.
Okay.
We will have the coffee index up there, but you have already, you know, they built out, you know, the cost of food. What's food index? How's that going to change? And then there's a company in Latin America. They built a lottery ticket. So you're buying lottery, and in the form of an NFT, a dynamic NFT, you're buying a lottery that then shifts based on Truflation data, and at a cutoff time, that data counts, and then you win or you lose, right?
So interesting. So they're actually the lottery prize.
Yes.
Is worth more or less because of inflation. This is opening up a whole nother world because, you know, before you weren't able to speculate on inflation. It was like, this is what it is. You can't really stockpile a bunch of food and gas and hold it for 5 years from now. But you've effectively opened up these financial markets, which are tools we have, you know, derivative markets to hedge corn production for farmers. And you're saying, why don't we hedge our consumption of anything?
Yeah.
And when that realization or on that journey, how is that shift? How has that changed? Like, as you join in or you jump into this inflation kind of like conversation more, what are you learning about this massive force on people that, you know, we really don't know the full implications?
So it has an impact to everybody, right? And now that we're actually aggregating all these different components that all add up to the CPI and are leading indicators to a CPI, we get a feel for what the sentiment is, but also we get the feel for what the price of oil is today. And if I can create a flat coin based on the price of oil, can we, based on the CPI basket, can I create a flat coin to oil, corn, to sugar, to coffee? So I can buy today a coffee at coffee's price, and I know in a year's time when I really want that coffee, I can actually buy that coffee at today's price, at the same price. I know I will always get a basket or a bushel of wheat, or I don't know what the terms are or the measurement, but I will always be able to buy that same amount today. So it's ultimately the hedge for anybody, and it's available to everybody, right? Not only airlines that can hedge against oil and have huge treasuries for that. All of a sudden, we've democratized that and made that available to every farmer, every coffee drinker, you know, that would want to buy
any
that.
individual.
Any
And so
individual.
the process is that you believe that the price of, let's say, coffee is going to go up in the future, or food, your food basket. So you're going to put dollars into the stable coin today to protect against that basket from degrading. Can you use those dollars in any way while they're in the protocol, or do they have to sit there as liquidity? How is that? Are you guys working on features for that? Or
Yeah, we'll be working on features for that. We don't have those yet today, but I mean, ultimately, you'll be able to trade off that.
Okay.
We want to get to a point where you can then actually go and spend that in a payment network somehow.
Okay.
So, I mean, ultimately, this is a journey. We're in a marathon, right? But I mean, if you think about it, we got into Bitcoin really early. We're very lucky to do that. And if you look at it, you know, what's it now? 12, 13 years since, you know, and we now have, you know, the Federal Reserve Chairman go up there and saying that cryptocurrencies are influencing their decision-making policies, right?
That's huge.
And that's huge in the course of 10 years, right? So that goal of separating state and money is something that is still, I believe, core of an objective of what we should be achieving.
I 100% agree. We got to that's the biggest invention that Bitcoin came and brought to the world. So the question I have for you is electrification. Electricity is what backs Bitcoin in my mind. How does that compare to the advancements in Web3 and what you're seeing there? Like, how are those similar?
So,
Or are they just two massive forces that have been introduced to the world that are going to change everything we know.
So my view, Web3 is just a marketing ploy, right? It's a new cool name to shrink wrap all of this stuff that's going on in the blockchain, from cryptocurrencies to blockchain, to the technology, the coins, to smart contracts. It's just, we call it blanket Web3.
Blanket Web3, I love it.
So, and it's a new name, right? So it's fresh, and it's politically correct to talk about Web3, but if you talk about cryptocurrencies, what are the regulations associated with that? Yeah, right?
Like, Bitcoin energy usage, it's like, chill, it's okay.
And I think what a lot of people don't understand is that from the energy, electricity is the core of what drives the economy. Every economy needs electricity. And if you look, there's even a book that came out, somebody wrote about it, about when the rising tigers in Asia grew, they had airconomics. It wasn't economics, it was airconomics. Why? Because they built enough electricity supply to maintain cooling in all of their office buildings across Singapore, Hong Kong, etc., so that people could work in dire heat and humidity and be productive still, without being, I need a siesta, it's so hot, I can't work anymore. And in Austin, same thing, right? We've got enough aircon to be able to work in an environment that we don't need to be out in the dry heat versus the humid heat.
And these problems effectively made, this solution effectively made humans way more, not valuable, but productive.
Productive, exactly.
And like better off overall. So Web3, what is it? How is it going to make us better?
And I think proof of work has a bad, the institutions have created a bad reputation for something that is hyper efficient. And what people don't realize is that every builder in the proof of work industry has to bring down their electricity costs
all day long.
It's all about efficiency, and it's how can I bring that down? And you tapping in, it's actually an electrodollar, right? It's really,
it's what Bitcoin is, effectively.
It's really that. And then the shift to proof of work. We just, from proof of work to proof of stake, that for example Ethereum had just done. That they claim that it brought down worldwide energy supply by 0.2%. Which is a huge number. I don't know what energy supply is worldwide, but I'm sure you go to that. Cambridge has a cool website where you can go and see how much worldwide supply is. And so they brought that down. But then, the same people that complained about the electricity consumption in a proof of work network, complain about, now it's a security. Now you can't have that, right? So
the SEC was like, because their Ethereum nodes are all in the US, now it's security.
This is security. Why is it a security? Because all of a sudden it's supposedly deflationary. And because they're supposed to be burning more coins than they are minting new coins. And if you actually go, there's a website called ultrastable.money, and you can actually see how much they're burning and how much they're minting. And in fact, they're not burning, and it's not deflationary, it's still inflationary, just at a much lower rate than if it were a proof of work network.
No, I've been thinking the proof of work networks are, like you said, the electrodollar is what Bitcoin gives it its value.
Definitely.
And it's interesting because we're seeing that these energy companies, they don't actually want to mine Bitcoin. And then when you think about it, they don't want to use their own energy. They're energy companies. They don't want to use their own energy to mine Bitcoin because of the potential PR, the bad press of using energy to mine Bitcoin. And like, you're multinational conglomerates, but you don't see the value of this energy dollar yet. And so it's going to take more years for that trend to shift in education.
Right? So, but they have a lot of wastage throughout the production, the transmission, the extraction, and then the transmission, and then the generation.
Well, then that's the problem. There's this one group came to me and they said, hey, we have a coal plant. We can't meet demand of the grid because we can't get the coal plant started fast enough. So we can't actually be that last reserve to make sure the grid doesn't go into blackout or brownout because the coal plant's not running to full capacity. But if they had a Bitcoin miner, it would already be running to full capacity, and then they could automatically put the power on the grid. But that right there might even be too controversial. Exactly. So it's like little things like that, like even utilizing the energy resources.
And is that because they have institutional investors? Are they publicly listed companies?
They're publicly listed, but it might be institutional investors. It could be the public about, oh, you're mining Bitcoin, like that uses energy. We have this false assumption of society. I think it probably plays into the true inflation index well, is that there's not enough energy in the world. There's not enough goods in the world. And we were talking about how someone could, how we could use the tools you guys are building to really extend let's say, the ability for the world to grow above 7-8 billion people. What do you see, what is holding us back from like economic growth, economic prosperity for all? Is it just massive policies? That's a hard question to answer. But what do you see holding us back the most?
Incumbents.
Incumbents.
These are the incumbents today. And so coming back, one of the ideas that I have as to why they're so reluctant to use and run up at capacity using Bitcoin mining is because if they did that, that would not comply with ESG criteria, under which all these big institutional funds, these legacy incumbent funds, can invest into their stock. And so as a result, they're worried that their stock will go down. They won't have that many shareholders interested in their stock because they've done something that does not comply to this checklist that was put in place by these incumbents.
And that's been a big push over the past 6-7 years. Like ESG wasn't a thing in 2010.
Yeah. No.
As much as it is
now.
Today,
right? It's taken everything, and funny thing is Tesla doesn't fit into the ESG criteria, but Shell, BP, all these big, Exxon, all of these big oil companies, they're okay, they comply.
Yeah.
So I don't understand that checklist. It just doesn't compute.
It doesn't make any sense. Yeah. The biggest electric car maker. So we're talking about Web3. How did you get into Web3? Like, you were a Bitcoiner.
Yeah.
Did you just hear along the whole journey, or was there an aha moment for you?
No, smart contracts was the aha moment, right? The fact that I could put more governance on chain and have the chain provide a consensus for smart contracts. To me, for that governance, that was awesome. That was really the aha moment.
The realization.
Yeah, the realization. I really got into Bitcoin because I loved the peer-to-peer electronic cash system. That's what I loved about it. I could pay, I could send money around the world to anybody I wanted to that had a Bitcoin wallet, and if they didn't have one, I got them to get one.
Yeah, it was a free one.
And the fact that you could do that seamlessly, instantaneously, at no fees, that to me was just awe-inspiring, right?
And it changed how we do commerce.
Yeah.
It changed how we think about the world. And so now Web3 is changing how we move, how we get consensus, and how we run programs on chain.
Yeah.
So Trueflation, how much of that is the data all on chain? Like, how do you guys collect making these data pools or data sources?
So we're not fully decentralized yet, but we're putting it all on chain, and it's all hashed. Every day the numbers are all hashed, so anybody can go and check it, and can't get it alterated and changed. Right?
And that's huge.
That's a first step, right?
We know how the CPI is. We know how it's calculated. We know its weights, right? But we don't know the data behind the weight, or if they're cherry picking data.
Well, you don't even know the weights. You don't know the allocations specifically.
Oh, really?
And it's all curated, right? You don't see transparently how they come to those calculations. And so we've tried to make it extremely visible for anybody to see. Visualization is really important. I think a lot of people look with their eyes versus reading in spreadsheets. And so that was just a big set of feedback that we got. And the fact that we're actually aggregating 18 million price items and tracking that versus the 60,000 that other institutions sort of
18 million.
Yeah,
that's insane. So one of the things I've heard about,
and we have multiple price points for a lot of those 18 million items.
And what do you mean, like different types of price points? So like one item at one vendor is this much, this vendor might be this much.
Exactly.
So one of the things I've heard is that inflation historically has been low because technology is advancing and the price of televisions are going down.
Yeah.
How is that affecting your index, or how did you guys take that into consideration? Is that, what does that mean for people looking at inflation? If you're waiting a TV that you only buy once every 5 years, if you're waiting that, everyone buys a TV every year, or a new laptop every year, obviously it's getting cheaper. Like, how do you deal with that?
So, we build that into the equation. We then have a data team that go and look at the weighting.
Okay.
And where we're getting to is within the next sort of 3 to 6 months, we'll then be exposing all of that weighting and allowing token holders to then allocate and vote and help us structure the weighting. At the moment, we're working with bigger institutions. We're working with Penn State to help us with the real estate allocation and how we weight property and how we get to a better algorithm that then computes what is the price change across the US for residential, commercial real estate, things like that.
So that is huge. So you guys are working with multiple partners to get all this data. I mean, how do you keep up with it all? You got the stablecoin, you got Truflation, like, come on.
We're about 50 people across
50
the
people.
Google Labs at the moment. So the Truflation team is about 12 people. The Nuon team, the Flatcoin, is also about the same. And then we've got people working on other projects as well that will be coming out soon. But I mean, I found that the other thing actually is the bigger an organization, the less effective it becomes. Because if you're more than 8 people at a table, at a conference, or at a diner dining table, you can then just be silent. Or not contribute. Or if you're, what are the action items out of this meeting? If you're 8 people, you're still pretty productive. If you don't come with a result at the next meeting, I couldn't deliver that, then that impacts me. And we know each other personally because we're still 8 people around a table. And that then has a bigger impact. And so how do we deal with that? And so how do you build scalable teams? And to me, it's clusters of teams. You need clusters because if you get too big, you get ineffective. You don't move fast anymore.
People can be like, it's not worth my time. I'm not worth.
Oh, Jack will do it. I won't.
Exactly.
It's like, they'll do it. It's like somebody else will. I'm sick. I just won't tell anybody, and I can push it out another week or something. Whereas in the startup world, you can't afford to do that. Or in rapidly innovating economies, you can't do that anymore. And the advantage. I mean, a couple of things, right? You mentioned technology. Technology is the savior of inflation. If we wouldn't have had technology, so if we don't have innovation, we would have much higher inflation.
Cost of everything
would be much higher. The other thing that brought down inflation is the global economy, right? Globalization has helped bring down costs because ultimately we can leverage more efficient manufacturing at one spot, more distribution at another spot, the sourcing of raw materials from another area. And we could leverage that, bringing up economies of scale that allowed us to produce 100,000 TVs at a much lower unit cost so that we could all have better TVs and increase the rate of how many TVs we buy and ultimately lead in more trash. But we're recycling those TVs now too, right? So there's a lot of raw materials inside a television, inside a mobile phone that are being recycled.
And reused.
Right?
The supply chain is coming down. I think what you said, the globalization is key. I mean, that's what has led us on this 20-year journey of lower prices, lower costs, and now we've hit the wall of QE, and now it's showing us the poison to that pill, effectively, of cheap money for everyone. So this dollar-based coin, I want to go back to the stable coin you guys working on. What's the name of it? Neuro or
Nuon.
Nuon. It's a Nuon stable coin, and talk to me more about use cases of the stablecoin today, and then also any type of regulation that might be affecting you guys in the future. What you're seeing, because it's a loud space right now.
Yeah, I mean, so look at how money has been distributed. It's centralized. You have a centralized institution that prints the money and distributes the money through large, centralized, incumbent organizations, private institutions, that then try to redistribute it to other smaller institutions that then are supposedly going to give incentive structures to drive adoption of this money into the marketplace.
And they're making investments, so that's like the funds, and they're supposed to hire people, or even like we're seeing with Goodwill, they get $20 million for a senior citizen working program and skill program. It's like, so the government's giving Goodwill money to hire senior citizens. Why don't we just give the money straight to them, and now they can enjoy their lives? And
guess how many people along the stages keep a portion of it, right? So everybody gets, and the amount goes from trillions of dollars to the first layer that get a percentage of that. Then it goes to billions, and then it goes to millions, and then it goes to thousands, 100,000, 10,000. And so every time there's a percentage that goes along the way. But of course, the 5 institutions that get the trillions are a much smaller community. And are ultimately keeping and have That's why if you go into every city center, you look at what all the logos on top of the buildings in any downtown city center, they're all banks, they're all accountants, or they're all lawyers. And the accountants are working for the banks, and the lawyers are also working for the banks. And so these are all downtown in every location. Those are the prime real estate owners. So it's a bit funny how that happens. I don't know.
The closer you are to the money, the easier it is, and like you said, the more work you have. Because if you're a lawyer billing $600, $700 an hour, heck, I got a new. It's a great example. This is the IRA Act. It comes out, makes renewables worth way more. That means every renewable law firm is going to make more money. Every accounting firm is working on renewables is going to make more money. All renewable companies now have all these new projects that no one needed the energy before. It's not lowering anyone's income, but now it's like, hey, here's another $800 million. That's not even on the taxpayer. It's just like, it's just $800 million added to the QE, right? More than that.
But how much of that 800 billion or million is going into building solar panels, building wind farms, building water hydro plants, or whatever it is that we need to meet the demand of energy requirements in a population, or nuclear power plants is now accepted as energy renewables as well, right? So,
I mean, it should be. It's the best energy we have. But
and if we don't build that infrastructure, we're not going to be able to
modernize the system.
Modernize the system, and it's just going to be lawyers and accountants and institutions and consultants and analysts that are going to tell us, oh, we should build one.
We should.
We should, right? We should. We should have a nuclear power plant.
You can pay me.
Oh, we can't get the regulations.
So one of the things that I've seen with financial education is that most people that are in the lower, like poorer and the lower middle class, it's because of they don't understand the forces that are at play. Like they are able to make by with a salary of, let's say, $50,000-$60,000, which is a great salary even today. How do you educate this group of individuals about the true wealth destruction that inflation has? Because when you think about 8%, it's like, oh, that's a pretty low number. What we don't realize as humans, we have a really hard understanding, is 8% compounding is huge. So what are you seeing on the education front? I mean, truflation is, like, I feel like the core product to help answer that, but.
And that's why we wanted to do the personal calculator, right? I mean, and will people spend the time to, track all of their how many people actually track their expenditure, number one?
Correct.
How many people, and so, okay, let's say we now have tools to do that, right? The credit card company provides you a breakdown, Mint provides you a breakdown. How many people then of that use those tools as well, right? And so how can we make it easier and easier to visualize what it actually means to you and how inflation impacts you personally and what you can do against that. I mean, that's ultimately one of the dashboards we wanted to create. It does require effort, so people need to invest the time to do so. And if you've got 2 or 3 jobs at the same time, it gets really difficult, right?
Well, and it's also, you don't prioritize it because you don't realize either how it's affecting you or how you can do anything about it.
But one thing I found was, I also think there's a role that our educational institutions need to take on. Educate at a much earlier level how, shall I lease a car? Should I go to a bank and get a credit to buy a car? Or do I use it on my credit card? Right? Do I buy the car off my credit card? Right? And how do I calculate? Well, how do I compare? How do I build? What tools are available to do that comparison? I think that would be super helpful, right? I mean, mortgage. How do you get the best mortgage? How do you count? What are the different types of mortgages that you have? Things like that to then streamline. Versus going to a loan shark, paying $20, 20% a month, or having it out on your credit card, having 20%, 30% a month, right?
And who has your best interest in mind? The reality is that you don't know as a consumer. You're just, okay, I have my credit card, I might not be able to pay it off this month. Well, I get hit at 18% interest. Well, there's another guy down the street that'll offer you 10%. You just gotta know who he is and talk to him.
Yeah, exactly. That sort of critical mindset, or I don't know, that we need to educate at high school levels, right? I mean, that can't come at a college level. I mean, you have just earlier that we can, in real world practical examples versus, how does that impact? So maths, You learn maths around examples. What would it take? That's the mathematics you need to do.
Yeah, the real world examples. Like when you're in math class, you should be figuring out how to use this math to determine your cost of goods or how to get a mortgage. Like that's all things you can determine with, it's all math.
Yeah, it's
like,
all math. It's like, what's the price per square foot in this house?
Why not correlate it to real world purchase decisions?
Exactly.
So with Lugano Labs, you guys raised money. Let's talk about that journey.
Yeah.
Can you explain to me when you started, like how the process was, how many pitches you had to do? Were people thinking you're crazy, or people were like, I love this idea? Talk through that, because I think it's something that, we're talking about financial freedom, financial education. Raising capital to build a business is one of the, I think, the best things you can do to build wealth.
Yeah.
So how was that process for you?
It's not an easy one, that's for sure. Nobody believes you at the beginning. Everybody's super skeptical, and you need to overcome that, right? I mean, I had the advantage that for Laguna Labs, when we launched, that I had a good team, I had a track record, and I had a lot of experience in being able to prove that I have executions capability. Mm-hmm. What investors generally look for is they'll invest in the team, so it's the people that matter. You matter if you're going out and raising money. So how do you bring across the energy you have, the passion you have, to sustain and hold through really tough times mm-hmm. that you will go through, the 50,000 no's you'll get before you get a yes, right? The skepticisms. Everybody's got advice. Everybody tells you how to do this better and that better. But when you're the person in the arena, you're the one fighting the bull. The bull's going to come out at you, and no matter if move to the left. It's like the bull's coming at me. If I move to the left, there's a big stone there. You
need to be the one in charge of your story.
Yeah, exactly.
And because people, like you said, they'll say no, but it's like you believe this so strongly.
Yeah.
And so I guess, what is that belief for you in Laguna Labs / Inflation? Why do you do what you do?
Because I just want to protect people's purchasing power. That's my mission. I believe global economic trade is going to create a happier planet. Mm. Because with exchange of goods and services for a certain value drives interaction. Interaction creates communication. Communication creates a better understanding for both parties. Mm-hmm. A better understanding of the both parties creates a much more consensus-driven environment versus a conflict-oriented environment. And that's what I want to get back to. And I believe the blockchain and what we're doing at Laguna Labs, putting more governance as it relates to economic benefits mm-hmm. to everybody, is the way to go about it.
Oh, 100%. It's the granular approach, but also has the macro in it.
Exactly.
And it's what, like you said, these forces that affect us that we don't really know yet. Blockchain is going to help us quantify that.
Exactly. And we'll put so much more is going to go onto the blockchain. We have no idea today. I mean, I wrote a white paper I think in 2020, 3 years ago, about how we can tokenize the planet.
Okay. Tell me more about this.
So can we tokenize the carbon credits, right? Can we tokenize, if you plant a mangrove tree, mangrove trees have been verified, scientifically proven to be a great absorption of carbon dioxide. And so, if you plant one, should you get, over the life cycle of that carbon tree, should you get, of the life cycle of that mangrove tree, should you get, how do you quantify that? What are some examples? How could you build a marketplace around that? And so build a whole ecosystem around that. Anyway.
So the thought process here is that, why do we let the big guys get the carbon credits and build their carbon sequestration plants? Why doesn't everyone have the same ability to, where they can, that's their job. They're going to go plant mango trees. Yeah. And the reason why you wouldn't do that for a job per se is because you don't have the credits, the government credits, or the system in place. But the reality is it's in place at the financial institution level, but it's not in place at the individual level, so they're forced to go work for another massive institution.
And so I looked at that industry. There are 4 or 5 companies that really matter and are the only ones allowed to verify and certify that you have planted that mangrove tree, and that mangrove tree is doing 10 carbon credits a day or a year or whatever it is. And of course they're big consultants. Yep. They're approved by the big institutions or the governments, if you will. and ultimately you need to pay them gazillions of dollars to come and verify. You and I can't afford that. And for that 3 trees that we have at home that we planted to do good, right?
It's not worth it.
It's not worth it. It's just, it doesn't work. So how can you democratize that or consumerize that and make that available to anybody?
By bringing all this data on chain, we're allowing it to be authenticated, validated at any moment, and then allowing people to take action. Incentives. Incentive structures are huge, and that's, I think, what is changing with the Web3 and with crypto is we now have the ability to control incentives. At the very, we all wake up in the morning and we have this plan of action, all because we've set these incentives up for us of what we're wanting to do and how we're going to spend our time.
Actually, a good example of that directly to consumers are things like, you call them city, but they are a very clear experiential manifestation of the incentive program. It's like Sweatcoin or Stefan, right? Where I walk to work, I earn coins because it's clocked my step, per step I do. So there are all these little ideas that all of a sudden with a phone, you can now earn money without doing anything, right? And
by doing your day-to-day.
By just doing your day-to-day. And how can we gamify more of what we do on a day-to-day basis?
And then it comes down to what does society value as value creation, and then how do we incentivize that? Like we value planting mango trees versus walking.
Right?
So this is a beautiful market. Yeah. So what are the problems with this space, like holding it back? Web3 in general, or Laguna Labs. I mean, what constraints are you guys seeing in the marketplace?
So it's the resistance to new and resistance to innovation. I think full stop. If I would summarize it, that would be it. And the reason I see that is we have today people running the world that have been in their roles for decades and decades and decades and decades, right? So 5-6 decades run, they're still in charge. They have not been entrepreneurs themselves. They have, not really, they've by attrition, they've worked their way to get to where they're at, just because they stood around and hung around the longest. And they're the ones deciding on how, and of course they don't want change because it's their professional life. And they all went to the same schools, by the way. They all went and worked at the same departments or the same offices and the same industries. So they're all together. And so they don't want change.
Because it's change to them doesn't bring any immediate.
What's the benefit for change? That means I have to work more. I have to understand something new.
My job.
I might lose my job. I might make myself obsolete. And so that to me is something we really drastically need to change quick. Because we can't become complacent. We need to innovate because otherwise somebody else on the planet will do so.
We'll do so, and we'll bring more jobs and scaling. When it comes to developers, how is that availability? The amount of all the developers in the world, Web3 developers, I mean, they're hard to come by. So what are you seeing like in programs to make more Web3 developers? What are you guys doing or seeing in the development world?
So a couple of things. One is there are about 26 million developers worldwide.
Okay.
About 18,000 of them are active on a monthly basis in Web3.
Wow.
So that's less than 1%. So there's a big push, and we're really building out Laguna Labs to attract developers and come up with economic models that incentivize developers to provide value to a blockchain instead of just building on the blockchain and getting a grant and then running away and doing something else. So how do we do that? And how do we incentivize developers? And where do we go to find developers that are interested in writing programming, right? So software development is complex, right? A lot of people think, no, it's just easy, just build that, right? It's like,
mobile app just works.
Exactly, it just works, right? What programming language do I need? What tool sets do I use? Does it have a database? What's the load that I need to manage and maintain? The input-output associated with that app, the process. So all of those things you need to make decisions on as a software engineer. That's the reason why they're called engineers. Maybe that's why. It's like we build a building. I need to know how many water pipes do I need? What's the toilet ratio to capital? What's the air ducts I need to manage the flow of air? I don't know.
They're solving really technical problems that if you don't solve in the application, it makes it unusable. That's space.
And those are infrastructural problems, right? And that needs to be solved. And so anyway, where do you go for those, and how do you attract them into the Web3? And the advantage that we have in Web3 is there's innovation happening, and there's creative freedom that these developers can exercise without the framework of legal restrictions, regulatory impediments, right? Lawyers, product managers, marketing guys that are shouting down their neck to get this down going and build this and to build this widget and only incrementally improve it. I don't want to change anything, just improve it incrementally, right?
I mean, that was
don't change my
Facebook.
business model. Yeah.
They have all these developers, 70,000, 80,000 people. They hire them not because they needed new products, they're working on cool things, it's because, hey, your job as developers is to just always make little changes.
Yeah.
And what that means is that you're incentivized to make new changes, but you're not incentivized to optimize old systems or to maintain old systems. And I think that's a lot of what happens in the development world, but it's like, how do we build core systems that we can affect people's lives? And I think the software is coming to that point, and Trueflation is one of those tools where it's like, this can really affect the lives of millions of people because it's fundamentally different than whatever everything else that's out there, and it's verifiable and trustable.
And I think Innovator's Dilemma, a book comes to mind, right? It's sort of, you look at that, and I think every tech company or every company that starts up is the innovator.
Yep.
And then you grow to a certain size, and then you run the dilemma. If I change too much now, I change my business model, right?
Yep.
And if I change my business model, then that could impact my investors who are going to be worried about going back into a new business, right? And so it's definitely a dilemma, and tech companies have been going through that all the time, right? I mean, we've seen a huge transition between all the tech companies, and if you don't innovate, you die.
Yeah.
Right? And you experience that. There's no government bailouts. There's no, you die. You crash and burn, and that's the way it goes, right?
And that's how it seems to be for everyone in the market who's a small business.
Yeah.
When it comes to the larger guys, it's almost like they're too big to fail.
Exactly. And they're the ones that get the bailout. But either way,
we progress from that.
But I think one thing that to me is that as an innovator, you have to get distribution faster than the incumbents get innovation.
Distribution faster than the incumbents get innovation.
Exactly. Because the incumbents already have the distribution.
Yep.
And if they understand how to innovate and then get the and so the incumbents are going to do everything in their power to slow down any kind of innovation that might threaten their distribution mechanism, right? Or versus adopt it. And I've been involved in a lot of different, I got involved very early on in the mobile industry. And I remember mobile app developers were the disruptors, right? It was like trying to build apps on I don't need apps on the phone, right? This was when Nokia was trying to sell, phones that could play music and have your credit cards in your phone.
Really?
Yeah, Nokia had all of that. But then they lost that ability to convert that into reality, right?
Because they weren't able to build the user experience that we now use today, which is the full screen. And so everyone was like, yeah, this is cool, but it's not 10x better.
Because they started shifting from an engineering-based organization into a more structured, financial, analytically driven, marketing orientation organization. And so as a result, what's the spreadsheet? What's the ROI of that innovation of building a flat screen?
Yeah.
And I'm going to base the ROI based on historics.
Yep.
Based on the pattern of our traditional phone, I can then calculate that if you're doing a flat screen phone, we launched that 2 years ago and nothing worked. And so if we take the trajectory that we've got now versus actually taking a fresh look and let's try and get something new into market. And I think that's the innovator's dilemma that really happened. So again, it also comes down to how big are you? How do you stay nimble? How do you stay focused? How do you have customer feedback and incorporate that into the product development cycle?
And your product needs to be amazing.
Yes.
I think as an incumbent, your product is the status quo, or it's the de facto, and it's not the best. It's not in this. So when someone has a new product, as a tech guy, they have to be 10 times better. Like you said, we're 30 times faster than the government in collecting this data for Trueflation. So.
And nobody appreciates tech companies deal with this all the time. And so how do they go about doing it? They generally do acquisitions. So they let small innovative companies blossom.
Yep.
Google bought YouTube for $1 billion. I mean, think of that. I mean, everybody thought they were crazy, right? They had all these lawsuits that had to clean it up, and they made it now today. But they saw something at the time that nobody else saw.
Yep.
Facebook bought Instagram, they bought WhatsApp. $18 billion they paid for WhatsApp. 50 employees, everybody thought they were crazy. But look at WhatsApp now. It's the worldwide messaging platform for everybody, right? And it's mobile. But at the time, everybody thought Facebook was crazy. But they saw something that nobody else saw. Instagram was just a picture, you know, it's just a place to share pictures.
Yep.
And now it's a part of their feed, it's a part of their product. And then everybody criticized them, oh, now they're too powerful, right? Adobe just bought Figma.
Yeah.
Why are they buying Figma? Because everybody's moving away from that Photoshop framework, and then nobody's using their cloud service, so everybody's using Figma though. Why are they using Figma? Because we need it in websites. Websites are more important than PowerPoint presentations.
Exactly, and that's where the real developers are.
Exactly.
So making the tool set that the future is using, how do you guys, with Luna Labs, you're building 2 tools for people, how do you view that experience being 10 times better? Like what, I guess, how do you think about making the experience?
It has to be 10x better, right? And so we felt that with Truflation, we can already do it 30 times faster. We're already doing it, you know, 1 million times better because we've got 18 million data point items that we track versus the 60,000 that other institutions track. And so we felt that that's definitely a 10x improvement, and we felt that not many people have tackled that problem, right? Yeah. And so we looked at that angle, right? And we had a lot of difficulty, coming back to the investor story, convincing investors that this was a moat. What's your moat? How are you going to charge people, right? Still people ask us that question all the time.
Yeah.
And it's like, our moat is the big, you know, how did Google build a moat? They started off, you know, with aggregating more websites and crawling more and more websites.
Than anyone else.
Than anyone else. And so our view was, how do we make a great user experience with the data that we're aggregating? And we had to convince a lot of investors, right? This isn't core tech. I need core tech, right? And so,
what do they mean by core tech, though?
So they mean sort of, okay, what's the core underlying algorithms that you're going to be building that's going to be unique to your service and you don't open source that? Or what is the infrastructure that you're going to be building in terms of hardware aggregation, software components that are going to plug into those hardware and build a new database on the blockchain, for example, right? But then you know, at least, that this investor is not the right investor for you. So you then go and find who and which investor suits you. But if you have a clear vision, you're not going to know. Some investors will like what you're doing, and it's latching onto that, because those are people that you can then brainstorm with, evolve your product. They'll give you good constructive feedback. They'll have faith in you as you go down this path.
And I think that's the most important thing, is that clear vision. As an entrepreneur, as someone raising money, anyone, if you don't have a clear story and vision, everyone's like, well, you don't know what you're doing either. The reality is, we all are emperors with no clothes on, and we don't know what we're doing, but you have to be able to have that understanding of, I'm gonna wake up every day, I'm gonna lead my team to this success, and I'm gonna execute, and I have done it before, I'm gonna continue to do it in the future.
Exactly.
And that's why you should give me capital.
Exactly. And it's all about, the guys that give you the money, they're capital allocators.
Yep.
And so they look for where they can get a return on their capital. And venture is high risk, so they know that I'm going to make some bets, but they're risking and they're betting on the people.
And you think when they're making a bet, they're more betting on the people than they are the technology or the idea? Or I guess, you know, it still goes together.
I think they go together, yeah. But I mean, it's, can the people execute on the idea and the technology that they, because actually I think more of the people, I'd say it's maybe a 60 to 70% weighting to the people, and then a 40% to the technology.
Because the people are the ones who end up building the story around the idea, and also the clarity around that idea, so they know where the target is. And so it's like the people painted the target, do they think you can hit the target? But if you don't have a target, you don't have the people anyway. So
and you may shift, right? The markets shift all of a sudden. Can you pivot?
Can you pivot?
Can your story grow? Can you grow? And can you grow off the same theme? You know, the other thing is, what if, you know, at the time everybody thought inflation was only going to be transitory. When we launched Truflation, what, you know, in 3 months inflation's going to be gone. So how are you going to be relevant, right? And it's like, we heard that a lot too, right? And it's like,
so how many no's did you get, if you had to estimate, before you got all your yeses to fill out the round? Are we talking 10 no's, 100 no's, 1,000 no's?
No, it was definitely more than 10, less than 100.
Okay.
I mean, it was definitely in the 10s. 20s, 30s, maybe 30 no's.
Nice.
But I was very lucky to get a yes very early on, and a super committed yes. So
And that you
helps.
think that's a key for
That's a
raising
key.
money?
It just gives you momentum. You have the support, the backing, and the credibility.
And so was that a yes with a check, or just a yes, I'm going to commit term sheet, maybe sign a document, or how did that yes come about, if you don't mind sharing?
So the yes came. There were two yeses, right? So the yes for Truflation came about with a term sheet and commitment, and a network, right? And so opening a lot of doors
Yeah.
and helping, and that got us going. And we still got a lot of no's, but at least we got a lot of doors to the right people really quickly.
Really cool.
And that helps. And then with Laguna Labs, we originally found a investor that had committed a significant check size to, because we just had an Excel spreadsheet and this concept of a flat coin, and that was, and I said, okay, we'll back you based on your background, we'll back you, and so we got that, and we then had to come up with the story, and then plan, and we walked them through our every sort of, we had weekly, monthly updates, and so we would just update how far have we come this month, and this is what we're thinking, this is where we're going, and they saw that progress, and we executed fast, right? And so that's what they liked a lot.
That's I think that's a key portion of young entrepreneurs. They don't. It's a lot of talk, but not a lot of execution. The reality is, it's better to not have any meetings for a whole week. Show what you can do, and then have that meeting and know what you want. And the investor is like, hell yeah, let's do it.
And so I have a statement that I stole from a really close friend that I worked with in the mobile ecosystem a lot. But code beats PowerPoint.
Code beats PowerPoint.
Yeah.
I love it.
So if you have code and you can show a demo, that's much stronger than a business plan on a PowerPoint.
Exactly. Because the code is like, oh, this is actually the feature set.
Yeah.
It's tangible, immediate.
And I can see you built something. You've invested your idea to try and conceptualize, take your concept and put it onto.
So it's easy to connect the dots and to conceptualize, but it's hard to execute and make better experiences, and that's why the incumbents don't do it.
Yeah.
That's why.
It's like, give me a plan, show me the Excel spreadsheet, what's the ROI, what's the investment going to be, what's the cycle, and so you have to go through this whole rigor mortem. Rigor, I don't know what the word, maybe that's not the right way to say it, but you have to go through this whole process to get to an outcome before you can even start, right?
Yeah.
So it's like so burdensome.
It's like you just finished the marathon and now you actually got to start your ultra marathon.
But it's also safe, right? There's no pressure on you if you're in a bigger organization because you're still earning your salary all this time. And if you're sick tomorrow and you don't turn up, nobody's really going to notice. I mean, if you do it very regularly, people get a bit upset and they'll notice. But ultimately, you know, you're in under this sort of safe umbrella or bubble. And so,
of the corporate,
yeah, exactly.
Well, Stefan, what else do you have to want to share with the community and on the podcast?
Look, you know, check out Truflation.com and you know, check out Laguna LAGU.NA. And check out our products. And if you're interested, you're a developer, build. We'll provide you with all the support we can to make your product a success around what we're trying to do.
And where can people connect with you personally? What's the best social media?
So Twitter, srust99, SRUST99, and then on Telegram, same handle.
Hell yeah. Well, thanks again, guys, for listening in to the Digital Gold Podcast. This is episode 1 of season 2, and we're excited to be back.
I'm glad to be the pilot.